Hello, my name is Eddie Tofpik. I am Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts to look at today. And the first one is Euro against the dollar. A second bearish black crow and a limited follow-on lower to the previous session's very large bearish and long black Mariposa pattern. It was nevertheless a second consecutive close below the significant 50% Fibonacci line of the September 2018 to February 2019 move at 112.96. Today we've dipped lower but also pulled back up over the previously mentioned 50% Fibonacci line, only to drop back again. This week it seems we may be building either a consolidation stroke hesitation phase for either a fresh attempt higher or a pullback down. So far it's not easy to tell which. The next chart I'd like to look at is cable, aka sterling against the US dollar. A second bearish black crow yesterday and a suitable follow-on lower to the previous session's huge bearish opening long black Mariposa, the longest one since early February. The market punched down through the recent 50% Fibonacci line at 128.53 and closed below it. Today we've dropped further down and this time halted at the September to date uptrend, which is currently at 127.75. This is not that stable a support as maybe its name suggests. Further down we have within a relatively close area the 50% Fibonacci line of the 2019 move at 127.36, the 2020 low at 127.25 and the long moving average currently 127.10. This area would seem to be more substantial. All this once again brings back the idea that after all, maybe we do have a head and shoulders top type action over the mid-October to date period. It's early but worth looking at and thinking about again. The next chart I'd like to look at is Euro against sterling, a third bullish white sold yesterday. And my supposition that the previous session might be a higher but indecisive spinning top proved false. The cap on the top side was finally ruptured yesterday after nearly 2 weeks of testing. The market broke up through the upper time, currently at 87.94 of the bullish December 2019 to February 2020 move, plus the nearby 50% Fibonacci line of the whole of the 2019 move at 87.99. It also shattered the long moving average, currently at 87.36, which had acted so effectively as a cap for all this time on a closing basis. Indeed, we actually ended up closing right on the upper time. Today, we've seemingly stabilised at these new levels so far. A little higher now, but no fresh new high so far. We're now running into some resistance dating from late September through to early October 2019. I also know, once again, to still maintain an eye on the last 2 weeks' action. I have a suspicion I should say, that it might morph into a bull flag affair. It would be likely to give a provisional target in the 90.40 area, just over the 90.19 October 2019 high. The next chart to look at is the US dollar against the Indian rupee. What earlier this week looked like the possible tweezer top turned out to be so. But it also now looks like it may be a Pyrrhic move as yesterday, or despite yesterday's gapping lower with a bearish black crow significantly below the late October 2018 high at 74.13 and this week's high of 74.25, with today gap back up and formed a new recent high, not far ahead of the October 2018 high at 74.47. As a result, yesterday's action is now looking like an island. The last chart to look at is the US dollar against the Brazilian real. Yesterday saw a huge bullish engulfing pattern, an opening long white Mariposa that effectively isolated Monday's action as an island. The market opened below Monday's close and completely enveloped the whole of Monday's higher action before closing with a new all-time high and high close, and well over the broken upper time, currently 470.74, of the bullish October 2019 to January 2020 Andrews Pitchfork that have been so successful in directing the recent bullish angle of attack. We're now into fresh territory technically, so I've doubled up half the bullish Andrews Pitchfork, drawn a fresh, very steep short-term bull channel, and obviously some new post-carnival projected Fibonacci levels in preparation for today. So that about wraps it up. So in the meantime, good trading and stay safe in the markets and in the real world.